Hey guys, welcome back to my YouTube channel. It's Aurelie here, and I remember someone left a comment and the person was asking me to make 1 hour in-depth video on my strategy, and that is basically what I want to do right here. This video is going to be long, so I'll advise you to get a notebook, something to take notes on, because I want to show you step by step how I've been taking my trades lately, and I've been having such an amazing win rate. This week, for example, I took 8 trades, and out of 8 trades I got 5 winning trades, 2 losing trades, and 1 is running in profit right now. But the market closed, I couldn't close that trade. So let's get right into the video. Now my strategy is simple. It's basically structure, key levels. My key levels are internal range liquidity, external range liquidity, and I want to see a CRT formation. If you don't know what CRT formation is, CRT is basically what we call the candle range theory. And this theory, I don't know who started it, but I just know that I learned it from YouTube. So the candle range theory is one of the things that I want to see before I actually candle range theory. This is what I want to see in order for me to know that a trade is going to work out or the trade is not going to go to my direction, right? Now, remember I said that I want to see market at price at key levels. The moment price gets to a key level, that is when I'm going to look for a CRC formation. Let's take an example for me to show you what an internal range liquidity is and what an external range liquidity is. Let's say in this scenario, we are in a bullish market, right? Now, for this bullish market, my internal range liquidity is going to be somewhere here, which is most often for me that trades Euro USD, gold, and BTC. My internal range liquidity is a fair value gap, and my external range liquidity, however, is this previous high here. So we are going to call that our external range liquidity. Now, this external range liquidity, what does that mean? That means that price is coming from an external range liquidity and is going to drop down to this internal range liquidity right here. And when price gets to this internal range liquidity, what is it going to do next? It is going to come back and take this external range liquidity here. So that is basically how the market operates. This is in the case of we are in a bullish market. In a bearish market is going to be the complete opposite of what is happening in a bullish market. So let's try and get it in a bearish market so we see how that is going to be. In a bearish market, market moves from in, out, then comes back in, then it goes out again, then it comes back in. If you're someone who has studied SMC, you're going to come to the realization that this is what we call basically a break of structure, right? Okay, what does that mean? That means that our external range liquidity is here, right? And we have another external range liquidity right here. But this is where we are targeting. We are targeting this one down here. Why are we targeting the one down here? That is simply because the market is bearish. The market is not bullish. If the market was bullish, then we are going to target the one up. But now that the market is bearish, we are targeting the one down. So this one has to go. Now, where does price has to come to? Price has to come to an internal range liquidity, which is a fair value gap. That means we are going to have market give us something like this, and is going to drop here. That is it. For a bullish market, we are here, and for a bearish market, we are here. Now that we have price at our internal range liquidity, let's take that example. We want to see a CRT formation. What is a CRT formation? As I said earlier, CRT is a candle range theory. A candle range theory, what does that mean? It means that price is going to sweep liquidity and close back inside the candle. Okay, let's get an example. I don't know if you can get an example picture somewhere. Let's get image, and I'm going to show you an image, and we are going to see that together. Okay, this is our image. So now if you look at these two images, right, you're going to see that the first image, that's what we call a valid manipulation candlestick, and the second one is an invalid manipulation candlestick. Why did we call the first one the valid manipulation candlestick? It's because you're going to see that this hammer candlestick, the hammer candlestick right here, swept this bullish candlestick, this bearish candlestick here, and it closed back inside the bullish candlestick, the bearish candlestick, sorry. That is a sign that the market is about to reverse to the opposite side. So we are going to see candle range high and candle range low. That is literally what we call CRT. However, if the market closes with a bullish candlestick like the second picture right here, sorry, if the market closes with the second picture right here, that means that this market is not a CRT formation, does not have a CRT formation. So we have to wait for a CRT formation. But remember, the CRT has to form at a key level, either an internal range liquidity or an external range liquidity. Now, I want to emphasize on this because after we talk about this, I'm going to take you to the chart and we are going to see step by step how this functions. Now, I'm going to bring another image, and for the image, we are going to talk about the candlestick psychology, because I've noticed that candlestick psychology is very, very important when you want to trade, when I'm trading my strategy. Why do I say it's important? Let's bring this. The reason why I say it's important is because it literally gives us information about what the market is about to do or what the market is going to do next, basically. So this is a candlestick strength. You're going to see that this green, on the green side, the first one is a strong buy. The second one is a strong buy. That means the more the market is going, the more you're realizing that we had either strong or weak. Now, in this first scenario, in the green first scenario, it means that we have more buyers in the market, right? In the second green scenario with the week below, it shows that we still have more buyers in the market. But what happened is that sellers came to this market and tried to push the market down, but buyers won. Buyers literally took the market up. The third candlestick is the same thing. Sellers came, they tried their best, but they didn't succeed. The fourth one, is the same thing. Sellers came again, they tried to push the market down, they didn't succeed. The fifth one, is the same thing. The last one is the same. Now for the red angle is the same thing, the reverse of the bullish. In this case, we're in a bearish market. The sellers came, they pushed this market up. The buyers did not even have a chance here. So literally, candlestick psychology is a power market, or it's a fight. I want to put it like a fight between buyers and sellers in a particular market, right? Now that this is being said, let's delete this and we focus more on this one. We need to understand that the market operates from a liquidity point to another liquidity point. Now that we know that market operates from one liquidity point to another liquidity point. Let's look at this picture again. Remember what I said. This first candlestick, the blue candlestick, it's a bearish candle. The second hammer candlestick, it's a hammer because buyers came to this market, right? They tried to sell. Sellers came to this market, they tried to sell this market to the downside, but they didn't succeed. That is why it took out the CR low and closed inside this bar, this first bar. Now, this third candlestick is where we look for our entry on the lower time frame. We are going to talk more about that in this video. This one, the first scenario, let's draw a circle on that. The first scenario right here is what we are going to call a valid CRT. However, the second scenario right here is an invalid CRT formation pattern. But that does not mean that we cannot trade this second one. We can trade the second one, but it's a continuation sign. That means this market is going to continue to sell. Let's put them in different colors. We're going to put this one in yellow. In this second scenario, we are about to sell. Meanwhile, in this first scenario, we are buying. right? This is a reversal, and this second one is a continuation. Now that is being said, let's delete everything and we start talking step by step from a chart perspective. Now, when we are looking, this is the 4 hours time frame, and this pair is BTC. Now, I want to take you step by step on how I trade. For me, I trade according to the time of the week, the time of the month. Let's say, for example, we are at the end of the month, right? I want to go to the monthly time frame to see what market is doing or how market closed the previous month. That does not make me a swing trader, but I just want to have a bigger picture of what is happening in the market for that month or for the previous month. How did the market close? Now I'm going to take you to this chart. Let me delete everything that is here so we can have a clearer picture. On this chart, we are on the monthly, right? And I'm going to ask myself, how did the month of November close? That's the question. How did the month of November close? Because we are currently in the month of December. The month of November closed bearish. Why did I say it? Do I say it closed bearish? It closed bearish because you're going to see this candlestick. This is the month of November right here. It closed bearish. Now that it's closed bearish, what is the overall structure of this market? The overall structure is bullish. Why am I saying that it's bullish? We are going to look at structure. We have a break of structure to the upside. Cool. Now that I see that, during the weekend, I start with a weekly time frame. So on the weekend, let's assume that we are on the weekend. I'll go to the weekly time frame. On the weekly time frame is basically the same. I want to see how the previous week closed, because how the previous week closed is going to give me an idea of what is going to happen this current week. Good. After that, if I am trading for a particular day, I will start on the daily time frame. On the daily time frame, I want to see how the previous day closed and what is the structure of the market on that time frame. Let's start from here. This is where we start everything. On this particular time frame, we are going to notice that market is bullish. Why do I say market is bullish? We have come to our monthly key level. This is our monthly key level here. Now that we are on this monthly key level, I want to see how market reacted to this monthly key level. And if I'm looking very well, market dropped to this monthly key level, but did not give me a CRT formation. Now, let me show you what CRT formations are on the chart. For our CRT formation, we are going to have a lot of them on this particular chart, and I'm going to show you the first one. This is my first CRT formation here, and I'm going to call that CRT. I don't know if that can be seen very well, but I'm going to zoom. Where are the candlesticks that I'm using as CRT formation? This is my first candle, and this is my second candle. So you're going to see that this second candlestick right here, right, swept the high of this first one, and closed back with a wick. The wick is very important. However, if it had closed above with a full body, that was going to give me a continuation sign, right? Good. Now I have this CRT point here. Let me look for another CRT point. We are going to see that together. I don't know if you guys can pause the video and look for another CRT point, but we have a lot of CRT formations on this particular pair on this time frame, which is the daily time frame. We have another CRT formation right here. I don't know if you guys can see that. We have a CRT formation here, right? So you see that this is a bullish CRT formation, and this was a bearish. This is a bullish, and this is a bearish. Now that we have our CRT formation, this is on the daily time frame. If you see a CRT formation on the daily time frame, you go for the 1 hour to look for your entry confirmation. That is how it basically is. If you see a CRT formation on the weekly time frame, you go on the 4 hours to look for your entry confirmation. If you see a CRT on your daily time frame, the 1 hour is going to be your entry. If you see a CRT on the 1 hour, the 5 minute is going to be your entry. If you see a CRT on the 4 hours, then the 15 minute is going to be your entry. So I'm going to write that somewhere here. So we are going to take notes together. So weekly CRT is going to be equals to 4 hours entry. Then daily CRT will be equals to 1 hour entry, and our 4 hours CRT is going to be equals to 15 minute entry, and our 1 hour CRT will be equals to 5 minute entry, and lastly our 15 minutes, because there is 15 minutes CRT will be equals to 1 minute entry. So for each of this entry, it depends on the type of trader that you are, right? If you're a swing trader, then the weekly is for you, the weekly and the daily. If you're a day trader, the 4 hours. If you are a short term, let me say a scalper, then the 15 minutes is for you. Now that we have this out of the way, I come to this daily time frame and I am asking myself, what happened on this chart? If I'm looking very well, I have kind of like a break of structure. Because why do I say I have kind of like a break of structure? Remember that I said price tapped into our monthly point of interest, but we need to see a CRT formation. We are on the daily time frame. We have not had a CRT formation. Now, where everything plays for me is on the 15 minutes. As I am talking, and it's on the 4 hours. If anyone has questions, please you ask in the comment section and I'm going to answer every question that you have. On the 4 hours, I have few questions that I'm asking myself. Where is market coming from? Where is market going to? Where is my internal range liquidity and where is my external range liquidity? Once I have this information, I plug them out and I wait. We are going to start from here so that we see exactly what happened. All right, we are going to start from here. Now I am here. Where is market coming from? Market is coming from an internal range liquidity. Where is market going to? Market is going to an external range liquidity. Where are those points? Right now, this here is my internal range liquidity. Where is my external range liquidity? It is this swing, this liquidity points here. Right? That is it. So now, next question I'm going to ask myself is, where are these points? This is my external range liquidity. And here is my internal range liquidity, as we call it, order block. Cool. Now, I'm going to ask myself the next question. Do we have a CRT formation? And if you look at this internal range liquidity, which is this order block, we are going to see that we had a CRT formation here. Now that we have the CRT formation, the next thing that I'm going to do is I drop to the 15 minutes time frame. But before we get there, let's continue again. You're going to see that market left from this internal range liquidity and it took out the external range liquidity. Then I'm going to ask myself again, where is market coming from and where is market going to? In this case, we are trading reversals. And if there's one thing that I've learned is that when you're trading reversals, you should mark 50% of the range and your TP should be there. At least part of your TP should be there. Now let's keep it moving. Price has taken out the external range liquidity. And the next question I'm asking myself again is that, do we have a CRT formation? And if I look very well from this zone here, there is no CRT formation. Why am I saying there's no CRT formation? Because the candlestick that took out this high did not have any CRT formation. This is the second candle after the high got swept, or the external range liquidity got swept. You're going to see that there was this first candle that swept the high, it did not get taken away. I don't know if I'm being understood, right? We wanted to see a CRT formation right here, but that did not happen. Let me change this to a line. It did not happen, so we wait. This is where patience plays a huge role. We wait. And sometimes you will wait, but you still need confirmation on the 15-minute time frame. Let's not play about that. The 15-minute confirmation is very, very important for you to know that you're actually doing the right thing in the market. Because sometimes you're going to have a CRT formation on the 4 hours, but without having an entry confirmation on the 15-minute time frame, price will take you out before it reverses to your entry. I'll show you some few examples. Let's take an example. We had this CRT formation right here. Let me show you. We had the CRT formation here, right? But you're going to see that price continued here. I don't know if you guys can see that. Now, this is where we finally had our CRT formation. I'm marking all these zones so that when we go to the 15-minute time frame, it's going to be easy for us to mark our entry points. So we are going to cancel this one because we did not get what we wanted. And we are going to cancel this one as well. This is what we are going to leave. If we look again very well, did we have another CRT formation? Yes. And pay attention, your CRT should be at a key level. That means either an internal range liquidity or an external range liquidity. Let me take an example here. We had this break of structure right here. Remember I said that we need external range liquidity or break of structure, internal range liquidity, and all that. Now, if you look very well, did we have a fair value gap here? The answer is yes. We had a fair value gap right here. So what happened? We had a CRT formation in this zone. We had a CRT formation in this zone. What does that mean? It means that price is going to come and take out this external range liquidity here. And that is exactly what happened. Or should we call it break of structure? However, but I will call it an external range liquidity. Again, if we continue looking very well, price swept here and it came back here. But you're going to see that right here, we do not have any CRT formation in this zone here. This zone here did not have a CRT formation. There is no CRT formation here. So we are going to wait for price to give us a CRT formation. And out of our patience, we are going to see that we have a CRT formation right here. So we are going to call that CRT. That is basically it. So now that we have marked our CRT formation, let me show you another CRT formation that we had. We had a CRT formation right here. But remember that it's very important to look at key levels. This is an external range liquidity right here, and we have our CRT formation there. Where is price coming from? External range liquidity. Where is price going to? Internal range liquidity. Again, price is coming from an internal range liquidity. Where is it going to? An external range liquidity. So from here, price is coming here and is going here. That is basically what is happening in this market. Let me delete this so we have a clean chart. So this is basically it for me. Again, let me repeat myself. I want to see an internal range liquidity. Questions that I ask myself: where is the market coming from? And where is the market intending to go to? Do I have an internal range liquidity? If it's yes. Do I have an external range liquidity? If it's yes, I wait for market to get to either of those points. When the market gets to either of those points, I now ask myself, am I seeing a CRT formation? If the answer is no, then I wait. If there is no CRT formation for me, there is no trade, or there is no looking for entry confirmation. Now, as someone who has traded SMC before, when price will get to this point, I'll be confused. I don't know if I should enter. I don't know what to do. But having a CRT formation at my key level or at my point of interest has made it much more easier for me. Now we are going to drop to the 15-minute time frame. Let me mark every CRT formation. We drop to the 15-minute time frame and we continue what we want to see on the chart before we finally end up taking our trade. We had another CRT formation here. So now let's drop to the 15-minute time frame, and this is what we are working with. We are going to the 15-minute time frame. On the 15-minute time frame, I want to see either, I think I wrote it somewhere, but I cannot find it anymore. I want to see either a liquidity sweep, change in character, fair value gap, or I want to see an SMT, change in character and fair value gap. That is what I want to see. Now let's start here. This is a 15-minute time frame. Remember what I said. I want to see a liquidity sweep on the 15-minute time frame. I want to see a liquidity sweep on the 15-minute time frame. This is it here. We are going to call that liquidity sweep. I want to see a change in character on the 15-minute time frame. This is my change in character here. We are going to call that a change in character. And I want to see a fair value gap on the 15-minute time frame because that is my entry time frame. You see that price tapped into it, and what happened? It started moving until it got to my external range liquidity. You see this external range liquidity that we're talking about here. Price took that out. Again, we had so many opportunities to enter this market again. We have another liquidity sweep here. We had a change in character here. And we had a fair value gap here. That's another one. Now, when we come here, what did we have? We have an SMT. What do I mean by we have an SMT? We are going to see that we have this high, right? And the second high failed to break above the first high. That is what I'm going to call a CMT. For me, that is a CMT. Then we had this fair value gap here. And you see that price tapped us there and it went straight to the downside. So that is basically how I trade. That is all I want to see in the market. Remember, my questions are, let me write it for you guys. Where is price coming from? Number 2, where is price going to? Number 3, is there an internal range liquidity / external range liquidity? Next is there a CRT formation? These are my questions. These are the questions that I want to ask myself. And I think this is what has given me a good win rate. Let me take you guys to my group. I have a group where I literally journal my trades. And this week, this is what happened this week. I had a total of 8 trades, and out of these 8 trades, I had 5 winning trades and 1 is running in profit. So that is basically how I trade. That is basically it for my trading. It's not as complicated as it used to be, though there are people who focus on time. But one thing that I do a lot is I set alarms. What do I mean by I set alarm? I look at the 4 hours time frame, the Asian session, the London session, and the New York session. When the Asian session closes, I want to come and see if there was a CRT formation, because my alarm is going to ring. If there's no CRT formation, okay, I have to wait for the 4 hours candlestick to close down completely. Then I come back again. After the London session, did the CRT close? Do I see any CRT formation? If it's yes, that means I'm going to trade the New York session. If the CRT happens in the Asian session, then I'm going to trade the London session. That is basically it. That is all. I thought this video was going to be like 1 hour, but it's like 30 minutes. So basically, that is what I had to share with you guys. And I really do hope that you all find some sort of value in this video. And if there is any question whatsoever, please don't hesitate to ask in the comment section. And I'm going to do my much more best to make smaller detailed videos to explain much more of what I know. And I want to say something here, that I did not just get up one day and I started knowing how to do this thing. I had to practice over and over and over again. That is basically what trading is. Practicing what you know over and over and over and over again. And the more you're going to practice, the more some things are going to make sense. The more you have to drop some things. We all can trade the same strategy, but we'll never trade it the same way. That is one thing that we all need to understand. We all can trade the same strategies, but we can never ever trade it the same way. We are not the same type of traders, though we have the same way of trading. That is why you will hear people say that, oh, I trade like this person, but this person has a 6R and I have a 2R. For me right now, I'm not so focused on making big R's, because trust me, my strategy gives me so much R. Let me take an example. My risk to reward, if I was taking this trade here, it's going to be, most of my trade give me a 1:5. I have trades giving me a 1:5, like no cap. I don't know why this thing is doing this. This is a 1:3.5, right? I have trades that give me more than this. Like this week, I had a trade that was in for a 1:7, though I took my 1:3 and I left. Let's not be greedy. Thank you so much, guys, for watching, and bye.